Silver and gold mania taking hold all around the world. A multi-month rally in the precious metals. We're going to look at all the reasons and examples why we can be optimistic that this absolutely can continue. We're also going to hear from the CEO of JP Morgan. He said something unbelievable. And did somebody else from Bloomberg refer to us as liking teddy bears? I'll explain more about that. And we're going to go to one of the most beautiful places on the world besides Ron's basement, because I know you love to come here. Well, I love to have you here down in the basement. It's a cold, dark, dank basement when you don't join me. So thank you for being here. Please subscribe to the channel. Leave a comment in the comment section. You don't have to agree with me or the other people. That's how we learn, is from each other. We respect your intelligence. And again, please subscribe to the channel. That really helps myself and our good friend upstairs, Susie, my lovely wife. Guys, it was a really rough Friday. Oh, it was horrible for gold and silver. I think it felt a lot worse than it actually was. I want to show you some evidence here to put things in perspective about the gold price, and then we'll talk about the silver price. But this article came out, and I was kind of shocked when I first saw it. Let's just read through this very quickly. And it is from Yahoo Finance. It says this right here. When I get to the top, gold notches its biggest gain since 2020. What? As precious metal goes parabolic. And I thought, well, this must have been from earlier in the week. But no, it was from Friday. Gold futures eased on Friday, but notched their biggest weekly gain since 2020 in a stunning rally. In purple, the precious metal declined more than 1% on Friday to $4,260 after hitting an intraday high north of almost $4,400 per ounce earlier in the session. Gold gained 7% over the past week as prices went parabolic in a perfect storm for the yellow metal, thanks to Kyle Rada, senior financial market analyst for Capital.com. So let's go out and take a look at the gold price to get you out on the right screen. I hope you're doing great. Again, thank you for being with me down here in the basement. I do have a special sponsor of today's video. We're going to hear from them in a little bit. But gold, this is the futures, December futures contract for gold. And when we look at this, if we go back to Friday of last week, okay, so right there, hold on. I want to draw this so that visually you can see what an epic week we actually did have in the gold market. And I'm waiting for my crayons. Here it is right here. There's the 10th. That would have been Friday of last week. Gold was at about $4,000 per ounce. Gold ended the week at $4,267. Gold was indeed up. So while yesterday may have felt a little uncomfortable, we actually had a great week in gold. Gold is the granddaddy of precious metals. But let's go look at silver and get you onto the right screen. There we are. We're on the silver screen. And what happened with silver over the course of last week? Again, this is the December contract for silver, closed the week in the futures market. Now, we're going to look at the spot price here in a second, but closed the week in the futures market at $50.63. We were on Friday at $47.50. So up about $3. Now, what happens when we go look at the spot price of silver? The spot price of silver is currently sitting right at $52 per ounce, $51.98. So we're doing okay, guys. That's the point here. I don't know about you, but yesterday felt kind of emotionally draining a little bit. It was probably the first time in a long time, but for a lot of us over the last 2 months that we had a pullback in the metals prices, but we are doing okay. All right. Now, what about this mania? Is it still going on around the world? Let's look at some proof that people all over the world have gone gold and silver crazy. If you're in the United States, you don't have to deal with these massive lines, at least not yet. From what I've heard, we have to wait for your neighbors and your uncles and aunts who don't own any gold and silver to come want to join us. We, in a very endearing way, like to refer to those people who are going to be new to precious metals as the sheeple. Okay. But we're seeing it in Asia And here is some indisputable proof that it's happening right now. We'll read this one first, but this is out of Japan, running out of gold. And this says right here, Japan's largest gold retailer suspended sales of small bullion bars for at least a month, unable to meet frenzied buying interest spurred by the metals surge to record highs. Tanaka Precious Metals Group said Thursday it had paused sales of all 5 to 50 gram gold bars and platinum bars of 5 to 10 grams as demand outstripped capacity. It aims to resume in late November, at least a month, and will continue in the meantime to offer gold and platinum bars weighing over 100 grams. Now, let's go look at some visuals of what's going on. This came from Bullion Star. They said, seen at Bullion Star before opening, customers already lining up to buy gold and silver. We'll put this on full screen for your viewing pleasure. And 15 people lined up to buy gold and silver. Ooh, and I believe this is in Singapore, somewhere in Asia, but there it is. And there's proof, right? Bullion Star. Unbelievable. Okay, let's go to the next one. More proof. Let me make sure I've got you on the right screen, which I do. Okay. Now you're looking at a post from Jesse Cohen. The gold rush across Asia continues as locals in Singapore storm gold and silver bullion dealers, a bunch of the dealers apparently, on Friday evening to buy coins and bars. And then he jokes and says, this looks like a near-term top. This is 10 seconds long. Let's take a watch. Well, look at this. Wow. Look. Dimon, the CEO of JP Morgan Chase, one of the world's, if not the world's largest investment bank, says something absolutely shocking about gold. Let's listen. And then there's more, okay? Because we're going to talk about one of the other richest people in the world who doesn't speak a lot about gold, hear what he had to say, and look at a crazy graph. So let's go out there right now. Thanks again, guys, for being here in the basement with me. Let's make sure we get you on the right screen. You should see, yes, you do, Jamie Dimon, okay, CEO of JP Morgan Chase, the same company that got convicted of manipulating the gold and silver markets, paid almost $1 billion in fines. Now he's saying gold can, quote unquote, easily go to $5,000 or $10,000 per ounce. Okay, fresh from reporting a solid set of numbers for the third quarter, JP Morgan CEO Jamie Dimon said he sees, quote, some logic in owning gold. He then says, I'm not a gold buyer. It costs 4% to own it. Well, yeah, you can look at it that way, right? You can put your paper money into a CD or a bond and make 4%. Or you can put it into gold, which, I don't know, went up, what, 100% in the last 2 years at least? I digress. Let's go right to the red. That said, Dimon admitted that gold could easily go to $5,000, $10,000 per ounce in an environment like this. This is one of the few times in my life that it's semi-rational to have it in your portfolio. The first time in Jamie Dimon's life, and he's talking about easily go to $5,000 or $10,000 per ounce. And remember, gold is the granddaddy of precious metals. That will bode well for our favorite friend, silver, and also platinum and palladium. But wait, there's more. Because in green, last week, billionaire Citadel founder Ken Griffin, one of the richest people in the world, said investors were starting to view gold as safer than the dollar, calling the development, quote unquote, really concerning. Okay. In red, amazingly, both Dimon and Griffin are very wrong in believing that capital is flowing from risk assets to gold. to get a sense of just how under-owned, and guys, this is critical still. This is one of the most exciting things about gold and silver, how under-owned it still is. Read the latest Bank of America Fund Manager survey. So Bank of America goes out and surveys a bunch of big institutional investors and asks them a very simple question. Which of the following comes closest to your current gold position in your portfolio? As you can see, 39% said 0. Another 20% said 2%. So essentially, we've got almost 60% saying they have 2% or way less of their assets in gold. Okay, 40%, 39%. I rounded up, okay? Anyway, rounding up, 40% said they have 0%. Do you know what that means? Do you know? Because now, all across the institutional hemisphere, we're hearing people, the big institutions, recommending, some are saying 20%, 25% allocation to gold. Right? Do you know what that means when just the smallest amount? We don't need 20%. If we got the 5%, guys, it's game over. There will be like no metal available. We know what's happening worldwide. We've looked at that. But if it happens in particular in the West, in particular in the United States of America, when the sheeple wake up and want to come join us in the silver and gold party, it will be like trying to drain Hoover Dam with a drinking straw or a garden hose. I think it was Doug Casey who made that one up. I'm not taking credit, but it's a great analogy, right? For us to go from 2 out of 100 people owning precious metals to 6 out of 100, which is still low, that's like 3 times as much money coming into precious metals. Now, for a word from the sponsor of today's video, guys, and then I will be back with more. We're going to go to one of the most beautiful places on earth, and we're going to talk about this deal that about teddy bears and gold. Okay, I'll be right back. The sponsor of today's video is USGO Inc. What's happening in the world right now can only be described with one word: unprecedented. We're seeing record gold prices over $4,000 per ounce, and billionaire hedge fund managers, including Ray Dalio, recently comparing the current situation to the mid-1970s and advising to own more gold than usual. Billionaire fund manager and bond guru Jeffrey Gundlach is saying to have 25% in gold, and that's not excessive. The Trump administration is making changes at the Fed and recently taking significant equity positions in mining companies. This is a seismic shift in gold, silver, and copper. They're all near record highs as well. For this new bull market, I'm profiling a gold-copper exploration and development opportunity on U.S. soil. The sponsor of today's video, USGO Inc., ticker USGO on the NASDAQ. Its Whistler project in Alaska contains the closest large undeveloped gold-copper exploration project to the main population center of Anchorage. The tailwinds from Washington, D.C. are exactly the opposite of what they were in the past 30 years. They're productive and constructive towards mining and positively contributing towards the overall rally in mining stocks. What transpired earlier this month is one of the most pivotal moments in the history of mining in Alaska. In my view, and when you couple it with the record gold prices and around $5 a pound copper prices, it has the potential for a major shift in the Alaskan resource sector. In early October, President Donald Trump and Secretary of the Interior Doug Burgum announced that the administration, acting on their previous executive orders regarding mineral resource opportunities in the state of Alaska, gave approval to the Ambler Road project, a proposed 211-mile road intended to connect the remote Ambler mining district to the Dalton Highway. That road is seen as a key piece of infrastructure to unlock access to the mineral resources in northern Alaska. The importance is the market signal. Here's why I think you should take a look at U.S. gold mining. trading on the NASDAQ with the symbol USGO, with the Whistler Gold Copper Project located in south central Alaska. Alaska is clearly important to the Trump administration. Trump issued an executive order on day one of his presidency called Unleashing Alaska's Extraordinary Resource Potential on day one. The administration then issued a second executive order called Immediate Measures to Increase American Mineral Production. The executive order directs government agencies to immediate action to facilitate domestic mineral production to the maximum extent possible, including copper and gold. In addition to the federal support at the state level couldn't be stronger. Alaska Governor Mike Dunleavy is a strong proponent of economic growth and the infrastructure to support mining in his state, and he has personally visited the Whistler project himself. Along with this support, the project has, in 2025, been visited by U.S. Senator Lisa Murkowski and by U.S. Representative Nick Begich. The Whistler Project mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent in the indicated category, plus 198 tons at 0.65 grams per ton gold equivalent for 4.16 million ounces gold equivalent in the inferred category. You should review U.S. GoldMining's latest annual report on Form 10-K and the technical report summary incorporated in it, and its Canadian technical report titled NI 43-101 2024, Updated Mineral Resource Estimate for the Whistler Project, South Central Alaska, with an effective date of September 12, 2024, for information on the company, the project, and the mineral resource estimate. These are available under U.S. GoldMining's profile at www.sec.gov and www.sedarplus.ca. Another reason why this gets interesting, in my view, is the company's ownership structure. It's quite unique. Take a look at this. 78% of the outstanding shares are held by the parent company. One shareholder controls 78% of the shares. Another 4.5% is held by management and insiders. That's over 80% of the shares being tightly held. A pivotal catalyst is now underway, which is why, between the following aspects of this opportunity, I'm telling you about U.S. GoldMining, symbol USGO on the NASDAQ. Historic Fed rate cut cycle has commenced. Gold at an all-time high. Trump administration has issued 2 executive orders on Alaska, and the state is moving forward with a planned road system. The West Susitana Access Project that will connect the Whistler Project with Anchorage. And now, one of the company's most important moments since inception is in the works. U.S. GoldMining has begun the process of an initial economic assessment, also known as a PEA, which stands for Preliminary Economic Assessment. This study is a preliminary review of economic factors, and the timing couldn't be any better, with gold reaching prices above $4,000 per ounce and copper around $5 per ounce. Do your own extensive research on U.S. GoldMining, symbol USGO on the NASDAQ. Make sure you review U.S. GoldMining's annual report and other filings with the SEC when you research this opportunity. And there's even more crazy news from J.P. Morgan. $6,000 gold. This time, not from Jamie Dimon, the CEO, but from his analyst. We're going to get to that right now. But first, I want to remind you, I'm not a financial advisor. Please don't buy or sell anything based on anything I may say down here in the basement. I speak my truth, what I believe about gold, silver, precious metal mining stocks, but always do your own research. Now, J.P. Morgan analysts this time are sending out even more great reasons for us to be optimistic about what is happening in the gold and silver market. This comes from Yahoo Finance. Headline, gold and silver are trading near record highs. Okay, I get that on the screen. Hold on here. Having some tech issues. We are live. Okay, there we are. Gold and silver trading near record highs. Wall Street thinks there's more to come. And wait till you hear this. All right, in yellow, as equity and bond markets looked increasingly skittish in the face of domestic and geopolitical economic tensions this year, precious metals revived their status as a flight to safety trade. That's not the good part. Here's the good part, and there's even a little something funny thrown in here. Take a deep breath, think about this. If just 0.5% of U.S. assets held by foreign investors were to be moved into gold, for instance, the yellow metal could hit $6,000 per ounce. That's according to analysts at J.P. Morgan. 0.5%, okay, of U.S. assets held by foreign investors, and we go to $6,000 per ounce gold. But now they're talking about teddy bears in orange. Who sells gold? Question mark. Bloomberg, right? More mainstream media. Commodity index products head Jigna Gibb said, quote, if you hold gold in your portfolio, it acts like a teddy bear in some way. It's a point of comfort. I tell you what, basement dwellers, we were always ahead of the time, right? You remember the big gold bear right there, currently holding the Ledger sign. Ledger's the crypto security leader. But that bear used to be blindfolded with a $2,500 blindfold. And we sat down here when gold was $1,500, $1,600 per ounce and said that when the gold price got to $2,500, we'd take the blindfold off. People said it would never happen. But we had our teddy bear, our point of comfort. And let's just say the blindfold is long gone and the bear is much, much happier today. All right, you want to go to the prettiest place on earth, right? Let's talk about Italy. But let's talk about Italy and gold. This is very interesting. And maybe you're feeling a little Italian yourself right now. Let me pull this up. This comes from Reuters. Here we got J.P. Morgan talking about gold. We've got Bloomberg talking about gold. Now we have Reuters. Italy's tenacious stance on gold pays off as the price soars. And basically what that article says is Italy has one of the world's larger, there it is right there. Am I sharing the right screen? Hold on here. Yes, I am. Sorry about that, guys. Italy has one of the world's largest central bank gold holdings. You see United States is supposedly in number one with 8,000 metric tons in Fort Knox. Germany, number two. Italy is the third largest holder of gold in the world. France and China are not too far behind. But what they're saying is for the size of their economy, Italy is doing very well with the current upswing that we've had with the gold price. This, I want to bring you, when I saw this picture, I thought this was the prettiest place in the world. I know, maybe pictures of our family and everything else, definitely prettier, but from a precious metals perspective, don't you just want to be there? Maybe we could do a live stream from that location sometime, and that is a secure room inside the Bank of Italy's gold vault is filled with stacked gold bars stored along the corridor and behind metal security cages. In this undated handout picture in Rome, Italy, the Bank of Italy handout via Reuters. Wonder if I can make that full screen. Maybe we'll just sit here and stare at it for a while. Wow. Oh, there's more. Hold on here. Look at that. Oh, my gosh. Woof. Okay. That makes my blood pressure go up. Is that what your basement looks like? All right, guys. Thanks for joining me today. Okay, it's a big deal when we're down here in the basement. I think we have big, good things to come. Continued. Like there's always going to be bumps in the road like we had on Friday. We could have weeks, months, maybe even quarters. But when I look out over any extended time frame, it's pretty clear with what's going on in the world. Remember those examples of what we saw in Asia. It's pretty clear when we have the big mainstream players, the largest financial institutions in the world speaking very positively about gold and silver, that we are headed in the right direction. I'm going to look forward to doing it with you down here in the basement. It's a big honor when you join me. Please subscribe to the channel, but most importantly, I want you to come back. Have a great day, and I'll see you